All right, boys. So two trades I took this week, and two trades I lost this week. Yeah, it was a really fucking tough week in the markets, and I actually ended up backtesting every single trade that was possible this week through Asian session, London session, New York Forex Open, and also New York Stock Exchange Open. Every single day, and throughout that whole time, there was two possible winning trades, and every other day was bad price action. Like literally every single day, like across all the sessions. So there was what? There was 20, so it was 18 sessions of bad price action this week, which is absolutely ridiculous. And for me, I haven't been trading London or New York. I've only been trading London or New York. So for me, across all those sessions, every single day was a trade that I should have avoided because of bad price action. So I ended up taking two trades, just disregarding that there was bad price action. That's a bad mental game for me, for sure. Not accepting that price action is bad and just moving on. I still ended up taking a trade in those bad conditions. But yeah, so there was one in Asian session that I could have won, and there was also one trade in New York, the New York Forex Open. So yeah, this is going to be a recap of my losing trade from Friday, and I lost 2%. I was like 1.85% of my account that I lost, and yeah, once again, all confidences ticked. Hit all my confidences, but just dodgy price action. I did see it, but it was really late in the night. I was exhausted, just looking to go to bed, I think, and I entered a trade, and yeah, ended up losing. But I'll jump into the charts. I'll show you this, and I'm also going to show one of the winning trades that I found in the Asian session that I could have taken. So let's get into it. All right, so I already started drawing this up earlier. But yeah, this was my trade from yesterday. So coming into market open, we had this massive downwards extension. So on an hourly time frame, we had two massive bearish fair value gaps that I was obviously going to be looking for bearish reactions off of. So market opens, and these were pretty much my only confidences for the day. We had this high all the way up here, but it was a bit out of reach for me to be even thinking about. Obviously, had these hourly lows in mind for take profits. But yeah, market opened, and pretty much immediately we just saw this big push up and invalidated this fair value gap, and we got a push into that second fair value gap, which I was looking for reactions off of. So scaling into a 5-minute time frame, I was looking for any sort of confidence that I could, and originally I saw this down here. We had a break of structure, and then that was immediately disrespected, and price ended up coming up and filling in that fair value gap even more without getting an entry. So I didn't take an entry off of that. However, over here we saw an inverse fair value gap, and what an inverse fair value gap means to me is pretty much the same as a break of structure, and it just shows me that, hey, price has disrespected bearish or bullish structure, and therefore we are breaking structure into the other direction. So for me, I was looking for entries off of this, which happened to be an equilibrium play for the day. So price comes up, we push quite far up into this equilibrium, and we broke structure on the 1 minute to the upside. So from there, I need to see a 1 minute break of structure and also a 1 minute continuation confluence for me to enter. And that is just because that's just in my strategy, and I just want to see more confirmation that we're actually going to turn back down to into a downtrend on the 1 minute time frame before I enter. And so as you see here, we come up into equilibrium, price chops around a bit, accumulates orders, and then with this candlestick, we get a 1 minute break of structure, from here, I'm looking for entries, which for me, it was this 1 minute fair value gap. And scale in here. So price comes down, break structure, and then we get a 1 minute fair value gap formed. And yeah, I mean, price barely comes back up in here. Reaction's off. That's enough for me to enter. I had stops above this high. And for take profits, that 1 hour confluence and those 1 hour lows were really far down. It would have been a huge risk to reward. So for me, I scaled into a 15-minute time frame, and I was looking for execution points on here. I had a first take profit set at this 15-minute low, and a second at the bottom of this, at the top of that fair value gap. So take profit 1 for a 1 to 2.1 and TP2 2.73. So not bad risk to reward, not bad execution. All confluences were hit, like I said. However, just looking at this 5 minute price action and forgetting about entries, forgetting about confluence, all of that. I mean, we're trying to take a trade in this consolidating uptrend, and yeah, just not ideal trading conditions at all. And it reflected in my result, and price obviously did just continue to chop for the duration of the session. I mean, look at that, that's just completely disgusting. So that's been a really common theme lately in trading, especially in these charts. However, we had this, just get all this off the screen. This is a winning trade that I wish I had seen, but because I haven't been trading the Asian session lately, I missed this one. So this is one of the 2 winning trades that I saw this whole week. And so market opens for, I think it's about 10 o'clock in Australia, the Asian session opens. So, I mean, you see this, we swept out that liquidity there, we had this liquidity sitting down here, but straight off the bat, we had this high, we had this imbalance here, and probably would have taken an equilibrium off that high to that low. Let's see how that looks. But regardless, forget about that. Market opens, and almost immediately we see this 5 minute break of structure. Whereabouts? Yeah. So here we get a bullish movement off of market open. We create this 5 minute fair value gap. This is our continuation confluence. This pretty much proves that we are wanting to go higher. After this, break structure on the 5 minute. Boom, I'm looking for entries. From here, we could scale down to the 1 minute. We've already had a 5 minute continuation confluence and a 5 minute confirmation confluence. Don't need anything else realistically. Scale into a 5 minute and into a 1 minute, and it was a perfect fair value gap entry. We were still bullish on the 1 minute, created this fair value gap, and we got a long position off there. Could have played it safe, stops underneath this low. Could have played it a bit dodgy, stops underneath there. For me, I would have placed stops right down there, and take profit 1 could have been, or probably take profit 1 at that 15 minute high. Take profit 2, obviously, probably would have got stopped out from this retracement. Still didn't take our stop loss, but I would have moved take profit to stop loss to break even. So yeah, 15 minute high, smack work. That was literally hit in 3 or 4 minutes. So that was the trade. Those are the sorts of trades I'm looking for. Ones where you can clearly see what price is wanting to do, where price is wanting to go. On a 5 minute, I mean, you can see the huge difference in this sort of price action to this. I mean, that's my main goal for next week, And that's what I'm working on over the weekend, is identifying when price is moving this way and just avoiding them at all costs. I'm actually going to be sitting in the charts every single session from now on, after seeing this week that there were 2 trades that I could have won. However, they were in different sessions. I don't want to be missing those. And so for me, I'm going to be sitting in the charts Asian, London, New York Forex, and also New York Stock Exchange. So that's my plan for the next week. That's how I lost 2% of my account today. And not a big loss, not a bad entry, but just not ideal price action, to say the least. Right, peace out.